Okay, so welcome to the deep dive, and today we're going to be taking a pretty deep dive into the January 2025 GBD report, Mania. I think this is a good way for people to get a better understanding of the forces shaping our world right now.
Yeah.
So we're going to zero in on speculation and how mass psychology plays a role, and what the report suggests about potential economic shifts.
Right.
So we'll be pulling the key insights directly from the analysis laid out.
And it's a really rich collection of thought that underpins this report, isn't it? You've got echoes from the past with the American founding fathers, thinkers like Forrest McDonald, John Adams, and Benjamin Franklin, sitting alongside the perspectives of economic and social giants such as Adam Smith, Hannah Arendt, and Gustave Le Bon.
Right.
Then you layer on top contemporary analysis of what's happening in the markets and on the geopolitical stage.
Oh, yeah.
It's quite a mix.
It is. And, the core worry that seems to bubble up from the report is this increasing number of people chasing wealth without a real grasp of what's driving things.
Yeah.
All unfolding against a backdrop of significant global and domestic instability.
Right.
It feels like the report's highlighting a kind of frantic grab for riches without much understanding of the underlying mechanics.
Precisely. And woven throughout this is the idea of mass formation, which the report explores as a powerful influence on how people behave, not just in financial markets, but in society more broadly.
Right.
The report draws connections between this phenomenon and things like rising inflation and even the intensity of current ideological movements.
Yeah, okay, so to get into it, let's start by unpacking the central concept of mania.
Okay.
The report kicks things off with Kingleberger's definition, the idea that some kind of economic disruption creates new opportunities for profit.
Right.
Which could then snowball into a boom.
Yeah.
The report immediately connects this to what it terms an everything bubble.
Right.
And the concern that many are trying to get rich quick without understanding the fundamental processes at play.
Mm-hmm.
It's like a gold rush where not everyone knows what they're digging for.
What's fascinating right off the bat is how the report then pivots to these historical perspectives.
Right.
It brings in Forrest McDonald's point about how the founding fathers were deeply concerned about the fragile nature of republics.
Yeah.
His argument is that certain core civic virtues, things like fortitude, courage, diligence, and focus on the common good, are absolutely essential for a republic to endure.
Right.
And the underlying fear was that a decline in these virtues would inevitably lead to the republic's collapse.
Right.
So the report flags a timeless worry for you that prosperity can ironically erode the very virtues that built it.
Right.
It's not just about economics. It's about the character of a society.
Yeah.
Something to really consider in our current climate.
It gets even more pointed with John Adams's warning.
Yeah.
He mused about how you prevent temperance and industry from leading to wealth.
Right.
And then how you stop that wealth from creating luxury.
Yeah.
And luxury from descending into what he called effeminacy, intoxication, extravagance, vice, and folly.
Right.
The report makes a rather stark assertion that the U.S. is currently in this later stage of that progression.
Yeah.
It's a sobering thought, isn't it? It makes you think about the values we prioritize today.
It truly does. And James Wilson reinforces this with the historical example of Rome.
Yeah.
He highlighted that Rome's greatness was founded on frugality and restraint.
Mm-hmm.
But as it became more prosperous, it abandoned these for luxury and excess, which ultimately paved the way for its decline.
Right.
The report draws a direct parallel for you, suggesting that if a nation mirrors both Rome's ascent and its fall in this regard, it's likely to face a similar outcome.
Yeah.
It's a historical pattern the report wants you to recognize.
Then you have John Dickinson emphasizing the importance of real-world experience over purely theoretical reasoning.
Right.
That feels particularly relevant today when we're constantly bombarded with abstract models and grand theories.
Yeah.
And Adam Smith, the father of modern economics, observing that learned individuals can sometimes ignore clear evidence right in front of them in favor of their preconceived notions.
Yeah.
It all reads like a caution against becoming too detached from reality.
Right.
Especially in how we think about the economy and society.
Yeah.
It's a reminder for you to stay grounded.
Exactly. If we connect this to the bigger picture, these historical voices are collectively stressing the need for a practical understanding of the world.
Yeah.
The inherent risks of unchecked ambition and excess.
Yeah.
And the potential for even well-intentioned ideas to go astray if they're not firmly rooted in observable reality.
Right.
Now, the report then pivots to examining the role of intellectuals in shaping these societal trends.
Right. This is where Patrick McKim's essay comes into play.
Mm-hmm.
And the report really focuses on intellectuals, or the intelligentsia, as key drivers of mass movements.
Right.
It paints a rather critical picture of this group, suggesting they're often characterized by a certain arrogance, a resistance to any kind of feedback, and a persistent craving for influence and power.
Right.
It's a pretty strong assessment.
It is, and building on this, the report brings in Eric Hoffer's perspective, suggesting that intellectuals often seek out mass movements to find significance and a sense of leadership. He argues that unlike those who take direct action, intellectuals rely on the power of ideals and persuasive rhetoric to exert influence. Hoffer even points out that in a society with abundant opportunities, like early America, intellectuals didn't necessarily flourish. He posits that their concern for the masses often stems from their own feelings of insecurity and lack of status. So it makes you consider the motivations behind those who shape public discourse.
And then the report lays out a pretty extensive list of specific traits that it attributes to this self-anointed intelligentsia.
Right.
It's quite a catalog.
Yeah.
Intense dissatisfaction with the current state of affairs, a desire to dismantle it, the use of emotionally charged language, a tendency to overlook contradictions in their own beliefs, a conviction in their own infallibility, a dismissal of anyone who disagrees with them, a preference for radical all-or-nothing solutions, a leaning towards revolutionary rather than gradual change, a strong focus on specific minority groups, a rigid adherence to their dogmas, coupled with the ability to suddenly flip on them, a heavy reliance on extrapolating from limited data, a belief that the ends justify the means, an obsession with bureaucratic control, a selective embrace of scientific findings, the promotion of this idea of toddler power, this notion that childlike emotions should dictate policy, and a tendency to project their own negative actions onto their opponents. It's a very critical and detailed analysis for you to consider.
This raises a really important question for you. Why does the report dedicate so much attention to this portrayal of intellectuals? It seems to be suggesting that understanding these characteristics is absolutely crucial for grasping how mass formations take root and spread. The report essentially paints them as the architects, if you will, of these significant societal shifts that can then have profound economic consequences. Now let's delve into the concept of mass formation itself.
So the report describes mass formation as a kind of collective psychological phenomenon, almost like a form of group hypnosis that severely weakens people's capacity for critical thought and can even erode their sense of ethics. It references the work of Matthias Desmet and Hannah Arendt in this context. To really drive the point home, there's even a quote from Bob Hope about zombies lacking their own will to illustrate this idea. The image of people blindly following a current without questioning where it's leading. It makes you think about times you've seen people act in ways that seemed uncharacteristic.
What's particularly striking for you is the report's suggestion that established institutions like academia and the mainstream press can inadvertently facilitate these mass formations. The argument is that by potentially undermining critical thinking, and ethical self-awareness, they can create a fertile ground for these phenomena to take hold and spread. It's a thought-provoking perspective on the role of these institutions in shaping public opinion.
And the report goes on to assert that these destructive mass formations are typically initiated and led by the very intellectuals we were just discussing. It offers some significant historical examples. The French and Russian revolutions, the various initiatives surrounding climate change, and the global response to COVID-19. It even brings in Rush Limbaugh's observation about the unwavering loyalty of his followers to Donald Trump as another example of mass formation in action. It seems the report views this as a widespread phenomenon that cuts across different parts of the political and social landscape. Something for you to be aware of in many different contexts.
Exactly. And for you to understand why people might be susceptible to these mass formations, the report outlines Desmet's key conditions. Feelings of loneliness and social isolation, a lack of a strong sense of meaning and purpose in life, and a pervasive sense of free-floating anxiety and frustration that isn't tied to any specific cause. It connects the loneliness aspect to the social restrictions and isolation experienced during COVID lockdowns, and the anxiety and frustration to James Stockdale's concept of fear and guilt being used as tools for manipulation. These are all powerful emotional states that can make people seek belonging and answers, even if those answers are ultimately harmful.
The report also touches on these newer, more subtle methods of coercion, like debanking.
Right.
Essentially cutting individuals off from the financial system as a way to enforce conformity within these mass formations.
Right.
But there's a crucial point of hope for you. The idea that these mass movements are ultimately temporary.
Right.
And that genuine camaraderie, real connections between individuals based on mutual respect and understanding can serve as a powerful antidote.
Right.
In contrast to simply pledging allegiance to some vague, abstract ideal.
That distinction between a superficial loyalty to an idea and the deep strength of true comradeship is a vital takeaway for you.
Yeah.
It suggests that fostering genuine human connections and cultivating critical thinking are essential defenses against being swept up by the currents of mass formations.
Right.
Now, the report shifts its focus to the potential economic repercussions of all this,
Right.
particularly concerning inflation and asset bubbles.
The report argues that inflation isn't just a financial problem.
Right.
It acts as a precursor to both dangerous financial bubbles and the kind of destructive social movements we've been discussing. It quotes Keynes on the insidious way that debauching a currency can undermine the foundations of society, and Le Bon on how indirect taxes can go unnoticed and therefore unchallenged by the masses.
Yeah.
The increasing consolidation of mass media is also presented as a factor that has fueled both mass formation and the creation of asset bubbles.
Right.
It's a potent combination, according to the report.
What's particularly striking for you is the historical scope the report takes here.
Yeah.
It points to historical episodes like the French assignat,
Right.
the Roaring Twenties, and the hyperinflation in Weimar Germany as stark examples of how unchecked fiat currency inflation led to widespread social unrest, war, and tyranny.
Yeah.
It then draws a contrast with periods when the monetary system was tied to a tangible asset like gold, suggesting that Britain and the U.S. experienced greater economic stability during certain periods under the gold standard.
Yeah.
These historical lessons are there for you to consider the potential pathways ahead.
And then the report gets into the specific concerns about our current economic situation. It highlights worries about existing asset bubbles and suggests that the general sense of unease and speculative excitement has largely migrated into the financial markets.
Right.
It points to discrepancies in corporate earnings reports, where reported earnings don't seem to align with underlying economic realities, along with high levels of insider selling and low market breadth, meaning only a small number of stocks are driving overall market gains. These are all flagged as potential indicators that the market's current trajectory might be unsustainable. Warren Buffett's famously large cash position is also mentioned as a potentially cautionary sign for you.
If we connect this to the figures within the report, it paints a picture for you of potentially overvalued assets that aren't necessarily supported by the fundamental strength of the economy. For instance, the high percentage of companies in the Russell 2000 index that are currently losing money, juxtaposed with record high U.S. corporate profits as a percentage of GDP, suggests a significant and potentially unhealthy divergence within the economy. It's something for you to keep in mind when assessing market optimism.
The report then delves into the massive increase in U.S. national debt and the rising interest rates and delinquency rates on consumer credit cards, which certainly paints a worrying picture for the financial health of the average person. It also examines specific sectors that are particularly sensitive to long-term interest rates, such as commercial real estate, residential housing, and multifamily housing, as well as the auto industry. In many of these areas, the report points to overbuilding and a decrease in demand. The data on things like commercial mortgage-backed securities, CMBS delinquency rates, and the growing inventory of unsold new single-family homes really underscore these concerns for you.
And the section on the auto industry is particularly detailed for you. Focusing on the challenges facing electric vehicle manufacturers like Tesla, the report highlights issues such as overcapacity in production, slowing sales growth, increasing competition, particularly from Chinese manufacturers, falling prices for EVs, and even emerging safety concerns. The comparison of Tesla's sales figures in China relative to local competitors and the data regarding their shrinking equity cushion are quite revealing for understanding the pressures in that market.
It even touches on the controversies surrounding Elon Musk's relationship with government entities.
Right.
And potential conflicts of interest.
Yeah.
Which adds another layer of complexity to the situation surrounding Tesla for you to consider.
Right.
Following that, the report briefly raises concerns within the healthcare, pharmaceutical, and information technology sectors.
Yeah.
Hinting at potential future restructurings and increased accountability.
Right.
The significant decline in the stock price of Moderna is highlighted as a specific example of a potential slow-motion crash in a previously high-flying sector.
The discussion around the potential AI bubble is also noteworthy for you.
Yeah.
The report mentions the recent resignation of Supermicrocomputer's accountant,
Right.
the increasing amount of money owed to NVIDIA, their rising receivables, and draws parallels to the situation with Cisco Systems in the lead-up to the dot-com crash of 2000.
Right.
It raises important questions about the substantial costs associated with AI development and deployment, and the currently uncertain return on investment for these technologies.
Right.
The comparison of NVIDIA's rising receivables to Cisco's pre-crash situation is a classic red flag, indicating potentially unsustainable growth.
Right.
Something critical for you to be aware of.
Looking at the broader economic horizon, the report considers the long-term trend of interest rates and the ongoing potential for significant inflation, referencing historical price-to-earnings ratios, PE ratios, to provide context. Based on its analysis, the report anticipates a recession, potentially with similarities to the downturns of 2000-2007, pointing to the unemployment rate crossing above its 36-month moving average as a key indicator. As for investment strategy, the report suggests a short-term move to liquidate holdings in securities and precious metal stocks. But advises considering gold and gold-related investments as a potential hedge during the later stages of an economic downturn and the expected depreciation of the U.S. dollar. These are specific investment considerations for you based on the report's analysis.
So the economic section paints a picture for you of considerable vulnerabilities, high levels of debt, potential asset bubbles across various sectors, struggles in key industries, and a forecast of an impending recession. The historical comparisons serve as stark reminders of the potential consequences of these significant economic imbalances. Now let's move on to the report's discussion of taxes, tariffs, and international trade.
This part of the report begins by referencing the work of economist Dan Mitchell,
who argues that the long-term decline in manufacturing employment in the U.S. is primarily attributable to increases in productivity, meaning we can produce more with fewer people, rather than being primarily caused by trade agreements like NAFTA or the World Trade Organization. The data presented on manufacturing employment as a percentage of the total workforce. And manufacturing's share of the overall economy seems to support this perspective for you.
What's particularly relevant for you is the concern raised in the report regarding the potential implementation of unilateral tariffs under a future Trump administration, and their likely negative impact on American consumers through higher prices. The report highlights the historical example of the Smoot-Hawley Tariff Act of 1930. And its significant contribution to the severity of the Great Depression, using data on the dramatic contraction of global trade to illustrate the devastating consequences. It also mentions the view of economist Thomas Sowell,
who argued that government interventions, rather than the initial market downturn, were largely responsible for the prolonged depression. These historical examples offer important lessons for current policy considerations.
The report draws an interesting parallel for you between the post-election stock market rally following Herbert Hoover's victory in 1928 and the current situation. It references the cautions of financial columnist John Authers about drawing definitive conclusions from such short-term market upswings. And his observations regarding current high stock valuations and relatively high levels of consumer optimism. The comparison of the Dow Jones Industrial Average's performance after Hoover's election to recent market activity serves as a stark reminder that short-term market enthusiasm doesn't necessarily translate into long-term economic stability or prosperity.
Exactly. Authors' points about stock market valuations being near record highs and consumer confidence remaining relatively strong suggest to you that the market might be priced for an overly optimistic scenario, leaving it potentially vulnerable to negative surprises. This ties back to our earlier discussion about the possibility of asset bubbles and the potential for a significant market correction.
Finally, regarding investment observations.
Okay.
The report points out for you the record low levels of cash holdings among financial institutions and the unusually high concentration of investment capital in just a handful of leading stocks.
Right.
Both of these phenomena are often seen as typical characteristics of a market exhibiting mania behavior and suggest an elevated risk of a significant downturn.
Right.
The report reiterates its view that the Federal Reserve's accommodative monetary policies have played a significant role in creating these asset bubbles.
Yeah.
It concludes by contrasting the potential peak forming in U.S. equity markets with possible emerging lows in international markets,
Right.
specifically mentioning China and Hong Kong as areas that might offer future opportunities as the current cycle plays out. The figure illustrating the low mutual fund cash-to-asset ratio really underscores the limited cash reserves currently held by investors.
So the discussion on trade and investment underscores for you the potential dangers of protectionist trade policies and highlights several key indicators within the financial markets that suggest we are currently in an environment exhibiting signs of a speculative mania, which inherently increases the risk of a substantial market correction.
So as we wrap up this deep dive into the GBD report, it's clear that several interconnected themes emerge for you. We've explored the growing prevalence of speculative thinking, the potential impact of intellectuals and mass formation on both societal norms and market behaviors, the significant risks of economic instability fueled by asset bubbles and high levels of debt, and the complexities and potential pitfalls of trade policy.
And what stands out is that the report offers a distinctly critical lens through which to view our current circumstances, highlighting potential dangers and vulnerabilities that may not be widely acknowledged or understood in mainstream narratives. It encourages you to look beyond the surface and consider these underlying forces.
Indeed, and this brings us to our final thought for you.
Okay.
Given the historical patterns of manias, and the powerful psychological influences at play, what personal strategies can you develop to navigate an increasingly uncertain future and avoid getting caught up in prevailing narratives? It's a worthwhile exercise to reflect on how you can balance the pursuit of opportunities with maintaining a clear and grounded understanding of the fundamental realities shaping our world. Thanks for joining us for this deep dive.
Thank you.